Welcome. Welcome. Happy Thursday, everyone. If it's morning, noon, or night, whenever you're watching this, welcome. So excited you're here. Oh, man, I'm excited for this one. I'm excited to talk about the real estate market in Greater Philadelphia, where I'm located and where I love to live. And also, how are you doing today? I just found out that on one of our rental properties that we have to now pay $2,500 to have a service line repaired, and it's not covered by insurance. Oh, man, don't you just love that? That is what it's like to own rental properties, though. You got to have some money in the account, right? Because things go wrong. The tenants didn't do anything. It's just a service line. It's an old service line, right? And that's what it's like to be a homeowner. The joys of being a homeowner. You know, it's really great when things aren't going wrong. And then when you have a leak in the basement and there's water getting in, and then you have a plumber come, he scopes it and says there's a crack in the service line. And then you reach out to your insurance agent and he's like, nope, not covered, dude. Sorry about that. And now, like, that's part of being a homeowner. This is what it is. It is what it is, right? And there's not much you can do except for roll with the punches, you know, and it's difficult to do that, especially in this market, right? Because it all ties in. It's difficult to do that. It's difficult to be in this market right now, especially if you're a seller, especially if you're a buyer. It's difficult to be in this market if you're a buyer, but if you are a seller, or if you are selling your home, or you're thinking about selling in 2025, hey man, it's good news for you. Fortunately, for the vast majority of the Greater Philadelphia area, the Philly suburbs, southeastern Pennsylvania, whatever you want to call it. You know, it's interesting. This section that I live in. You know, I'm born and raised in Philly. Moved out to the suburbs, right? So you hear people say the Philly suburbs. There's a lot of counties that surround suburban Philadelphia. Then you hear southeastern Pennsylvania, and you hear Greater Philadelphia. There's not a lot of different names for it, but I'm going to focus on 5 major counties today. That's right, 5 major counties. We have Philly, the city, we're going to look at a little bit. Chester County, where I live. Delaware County, Montgomery County, and Bucks County, right? All of these areas, these surrounding areas of Philadelphia that make up the Philly suburban market, that's what we're going to be focusing on today. That's where I live. That's where I sell most of the homes that I do sell. And this is the focal point of today. It's going to be an awesome conversation. I'm going to look at data, actual data, real life data, and be able to disseminate like what the heck is going on, because right now it's challenging, right? Right now we're in a market where there is a housing inventory crisis. We are in a housing inventory crisis as of today, November 21st, 2024. It's been this way for a pretty long time. What I mean by a housing inventory crisis, simply, we do not have enough homes for sale for the amount of people who want to purchase a home. Flat out. I mean, that's where we're at. Flat out. Okay. So what does that mean? You know, with interest rates still being in the upper 6%, I checked this morning, we're at around like 6.92% for a 30-year conventional loan. You can get a little bit less if you are doing FHA or VA, USDA. You can always buy down the rate too to get it even lower, but we're sitting at about 6.92%. You know, and where is the interest rates going, mortgage interest rates going to go in 2025, right? How is that going to affect the Greater Philadelphia market, you know, the suburban market and Philly itself? Because if we can get more homes that can meet the demand of the buyers, what is that going to mean for us moving forward? And that's all the stuff that we're going to get into today. Let me do my little share screen with you guys. All right. I am going to share. I think the whole window is sharing because that's what I want. No, I don't want to do that because that is so confusing. I'm going to stop the share on that. I'm just going to bring up individual windows because it makes it so much easier. I don't want to. All right, let's do this. Market statistic reports. All right. So we have Chester County. That's where we're going to focus today. We're going to look at Chester County. That's where we're starting. Again, we're going to hit the 5 major counties, Philly and the 4 surrounding. No Jersey, no Lehigh Valley, no Lancaster, just the 4 surrounding areas, the closest ones to Philly and Philly itself. So, Chester County, wow, what an increase we have seen in Chester County, actually in all the counties over the past 4.5 years, right? Since COVID, it's been absolutely insane. So this is going back to January, right? So I'm looking at or actually year to date, excuse me, not year over year. I'm looking at year to date from January up until the latest information that we have, which is October of 2024. Now, when you look at this, it might seem like mumbo jumbo, and that's why I'm here to break it down for you. On the left, we have the dates, and it's going to go by months, and it starts at the bottom and works its way up to the top. Next, we have units listed, which is the total number of listings that went active during the month. So as you can see, we started out low in January, 360, jumped up to 488, 560, 733, 804, and then it came back down, right? So this is like the spring market. Obviously, we get more listings in this area in the spring market. And then in the summer, going into fall, it gradually drops. And, then we have October 555. So this is the listed volume. And every single sheet that I show you is going to look like this just for different counties. So listing volume, this is the total dollar value of all listings that went active during the month. This is based on the original list price. So you can see, you don't really need that. This doesn't really help that much. It's just how this sheet breaks it down. It's good to know. Listed median. So this is very interesting. Now we're getting into a little bit more of what's important. So the median listing price started at 525, then jumped up to 535. Now again, when you're talking about the median, it's in the middle, right? It's the middle part of where listings, because you can have varying ranges from $100,000 up to $10 million in this area, and the median is the middle. We have the EOM, which is the end of month inventory. This is the total number of active listings which were available for purchase at the end of the month. And now this, in my opinion, is one of the most important numbers that we're going to focus on today. And this is the MSI, the month supply of inventory. The month supply of inventory gives you a good understanding of where we are at in the market, right? There's 3 different types of markets. You have a seller's market, I'm trying that, a neutral market, and a buyer's market, okay? Seller's market, neutral market, buyer's market. Anything that is in this range from 1.5 to 2 months supply of inventory, that is a very strong seller's market, okay? The month supply of inventory is the measure of how many months it would take for the current inventory of homes on the market to sell, given the current pace of home sales. So as you can see, we are currently as of last October at two months, okay? 2 months supply of inventory. That is very, very low. A more neutral market would be anywhere from 5 to 6, and then pretty much anything above 6 is a buyer's market. I have never seen a buyer's market in this area since I've been in the business, since 2000, beginning of 2000, well, almost midway through 2016, okay? I've never seen a buyer's market. So I've seen it closer to 4 months supply of inventory, 4.5 months, which was, still a strong seller's market, but closer to a neutral market. But now what we're seeing is this is very, very, very strong seller's market in Chester County, and you'll see that this is the majority of the suburbs as well, but Philly itself, the city, is a little bit different. Pending, this is the number of listings that went from active to pending during the month. Units sold, pretty straightforward, the number of units sold during the month. And then the average sold volume, or the excuse me, not the average sold volume, but the total sold volume for all of the properties that sold during the month. And then we have the sold median. So this represents the median price of the listings that were closed during the month. Again, median is middle. I like to look at median. I don't like to look at average, and I'll explain that in a little bit. And so that's a very important number. So for the purposes of you watching this and understanding what is happening in the real estate market, in my opinion, list prices don't really mean much to me because it's just the beginning, right? It's the beginning of the negotiation. To me, the month supply of inventory is very important. The sold median is very important as well. And the average days on market is very important, right? Those to me are probably the most indicative to if you're thinking about listing and selling your home, these are the numbers that I would say to look at. So you can see that the total sold, or the average of the sold median year to date, is $529,808. That's really high. So that means that Chester County as a whole, the median sold price for 2024 is $529,000. That's really high, right? And I can show you what it looked like last year just to see the increase as well, and we can get into that. Now, for days on market, this is really important. This is the average days on market that a listing closed during the month. So you can see, it's ranged. We're at 70 days on market back in March. That's pretty wild. 70 days on market. But we're at an average of 28 days. Why that's important? Because you need to understand, okay, if I were to list and sell my home, how long realistically would it take to sell? Well, the median right now, the average days on market is 28 days total for the year. Now, your home could sell way faster than that, and your home could sell way longer than that, right? And it all depends on where you list, meaning where is the list price, how good the promotion is of your home, and how good of condition the property is actually in as well. Take that into account. The CDOM, I don't really look at that, the cumulative days on market. But as you can see, let's take a look at the report summary, because this is generalizing everything. On average, for the year, Chester County has sold 470 homes. The average sold price is $614,000. I look at that, but I don't really take that into account because that's saying the average, right? So you're looking at homes that were 200,000, and you can be looking at homes that are 12. Something could sell for 12 million, right? And that's the average. That doesn't really give you that good of an understanding. Takes you 417 homes have gone pending during the year on average per month, but then the median sold price, and this is way more important in my opinion, $529,000. The median sold price, right? It's really important. I want to share this with you as well, just to give you a better understanding. So sometimes it's a little bit confusing. The average sold price. The average is when you take all of the houses that have sold, add up their prices, and then divide by how many houses were sold. For example, if you had 3 houses that sold, one for 300 grand, 400 grand, and 500 grand, you add those up and you get 1.2 million. You divide it by 3. That brings the average sold price to 400,000. Okay. For a median sold price, this is why I like the median more. The median is the middle price when you line up all the houses by price from cheapest to most expensive. The vast majority of homes fall in that median category, right? The vast majority of the homes in any area falls in the median. So using the same houses, 300 grand, 400 grand, and 500 grand, the middle price is 400 grand. So that's the median sold price. Key differences, right? And this is really important for you to understand when you're thinking about pricing your house. The average can be skewed. If one super expensive mansion or a super cheap home sells, it drags the average either up or down. The median isn't affected by extreme prices. It's just the middle, so it gives a better idea of what most homes are selling for, okay? That's why I go with median. That's why it's more important. So if $500,000 home sold alongside of 300 grand, 400 grand, 500 grand, the average would jump to 1.55, right? And if you're looking at that, you're like, "Oh my god, the average price in my area," right? If you had these 4 sales is 1.55 million. This is insane. This is great. That's not true. The median would still be 400 grand, and that gives you a much better idea of what homes are selling for in your area, right? And then even to get even deeper into the more nitty-gritty of it, you really have to look at your home, compare apples to apples, and understand that this is really important, right? This is really important for you to understand, especially in this area. School districts are so important. School districts are very, very, very important in the greater Philadelphia area. You can have disparities up to $100,000 difference in home price for the same home in a different school district. So, in Downingtown School District, where I live, compared to Oxford or compared to somewhere in Parksburg, or if you look at a home that is in Darby compared to Broomall in Delaware County, or if you're in Montgomery County and you compare a home in, Norristown compared to Bluebell, right? School districts here are so, so, so very important. They don't really matter that much in Philly because the public school system is what it is. There's a lot of people that are in the higher areas or the higher end areas of Philly are sending their kids to public school anyway. Um, but when you look at and then with Bucks County, if you look at Bristol compared to New Hope, right? Right, the disparities are very, very big, right? They could even be more than hundreds of thousands of dollars. So, school district in this area is major. It's a major thing of importance when it comes to selling your home. Downingtown borders with Coatesville, right? So if you have the same home in a very similar neighborhood and it's in Downingtown School District, right next to one that's in Coatesville School District, the house in Downingtown will sell for more because the Downingtown School District is more desirable than Coatesville. Okay. So you have to understand that. And that helps you to focus on where to actually list your home, and it helps to keep in mind when you're coming up with the market analysis, right? You don't want to compare a home in different school districts. It does not work that way unless it's a very unique property, meaning multiple acres, right? Because we have a lot of farmettes in Chester County, equestrian buyers, equestrian properties too. So, like, if you have a 50-acre property that is in Downingtown and there's no comps for it, you might have to go out into different areas as well. You might have to go out into Unionville, Chadsford, or you might have to go out into Westchester and compare that way, right? But for the vast majority of people who list and sell their homes, you have to take into account the school district because, again, there's huge disparities between unfortunately, there's huge disparities between some of the school districts, compared to others in the same county. So that's important to know. All right. So that's the report summary. These are the averages for Chester County. Currently, the current inventory as of November 2024, I just ran this report this morning, is 1.8. Last November, it was 1.7. Last month, it was 2. And then we have the average list price. This is insane to me. 887,000. The median list price is 595,000. And then new listings, 335. New under contract, 282. So when you look at this and you really break it down, now an easy thing for me to show you would be if I revise this. And I have these numbers in my head. If I go to January of 2023 and I go out to October of 2023 and I ran this report again, just to give you an idea of where we came from. So the median sold price was $528,000 in 2023. It was $499,000 in the same amount of time. I'm sorry. In 2023, it was $499,000. Let's just say 500 grand. But this year, it's $528,000. So we've literally seen a $28,000 increase just in the sold median price. So it's gone up that much. I'm no math wizard. Let me see. I'm going to look like a complete ding-dong if I do this, but I'm going to do it anyway. So you divide 500 by 528, right? A 9.4. Does that make sense? 9.9% increase? A 9% increase, right? So if I took 500 times 0.09, no. See, I knew this was going to happen. I'm doing it anyway. 400. So you would do, what would you do? 528 divided by 500. 10% increase? No, that doesn't make sense. It's like a 4, right? It's like a 4 or 5% increase, which for homeowners, that's great. Your values are going up just because of what is happening in the market, okay? Obviously, you have to keep up with your home and make sure that everything is up to snuff, right? But that's where we're at for Chester County. Thanks, Jenny. Another great topic. I think so myself, too. So I'm going to stop sharing. I'm going to pop over now to what other county we got. What do we got here? All right, let's focus on Delaware County. So now that I explained all this great stuff to you, again, you know, we're going from January until October. So not year over year. We are doing year to date. That's the most accurate information that I have, year to date. Delaware County is a little bit bigger. Population is a little bit more than Chester County. So we have the listed median, but the values are a little bit less just because of certain areas in Delaware County that sell for fairly cheaper. Let's see. So when we're looking at, again, now I don't look too much at the total units, total listing volume, or the listing median. I'm always looking at end of month inventory, where we're at, and then the month's supply of inventory. So as you can see, it started out really low in Delaware County. It was 1.5, then it shot up to 2.2, 2.3, and then it went down. And now in October, we're at 2.3 again. So a little bit more inventory than in Chester County, which is good because if you're thinking about moving to Delaware County, there's a little bit more for sale. We have the sold median. The average sold median is 348,000. So this just gives you an idea that if you're looking in the Delaware County area, this sold median is about $348,000. So it's much more affordable to live in Delaware County than it is to live in Chester County based on the average value of properties, right? But one thing you have to take into account in Delaware County, there are some towns, some cities in Delaware County where the homeowners or property taxes are very high. Very, very high, especially places like Drexel Hill, excuse me. I sold a property there a few years ago. It's like a 3,000 square foot home, and the taxes were like 12 grand a year. And they're probably only going to go up there. Hopefully people are starting to reassess, but some places in Delaware County, the taxes are very, very high. Very, very high. I don't want to get into why. I don't necessarily know exactly why. I just know that they're very high. So if you remember, Chester County, the sold median was 528,000. Delaware's 348, a little bit more, actually substantially more affordable. Average days on market is 32. So Chester County was actually 28, so not that much different. Few days. Again, median sold price 348. Now, the average sold per month for this year, 477. Average sold price is 459. Again, you have that disparity. You have some really, really beautiful areas, some beautiful properties, some estates in Delaware County that will sell for multi-millions, which skews that average sold price up. But 348 is the median sold price. When you look at the current inventory accumulation, you're at 1.9 months supply of inventory. So again, extreme seller's market. If you are considering selling, there's a good chance you're going to sell pretty quickly. I know the average days on market is 32, but again, if you position everything correctly, if you list it correctly, if you present it correctly, then you're going to sell in less time than that, especially with 1.9 month supply of inventory. Last year at this time, it was 1.8. Last month, it was 2.3. And again, the median list price right now is 350 grand. Average is 581. But again, you want to look at the median because the average is always skewed because of higher end properties and lower end properties. New listings 416. So just to give you an idea of what it was like, I'm actually going to go. So we did for this one, just so I remember, we have 300. Median sold price is 348,250. 348,250. So I'm gonna pop over here and look at last year. So if I do all of last year, I'll even do December, just so you know. So we have 340 right now in 2024, 348,250. The median sold price was $315,000 for all of last year. So you can see it's a pretty significant equity gain just because of the market, right? So what are we at? 20, 25, 30? Yeah, about a little more than $30,000 in equity gain year over year. Pretty staggering, right? Pretty staggering. All right, so let's switch now over to, we're going to go to Monco next. I love Monco. I love this entire area. I'm not a huge fan of Philly anymore. It was nice to get out. I'll say that. Oh, you know, let's look at Bucks County. Bucks is cool. All right. So we have Bucks County. I got to revise that a little bit. Let me go from the beginning of this year, January 2024. Let me know. What are your comments? What do you guys think? If you are that person that is considering selling, what are your thoughts about this? We have January until October. So Bucks County is another super hot area, super hot suburb area of Philly. As you can see, the month supply of inventory is really low. So 1.2 at the beginning of the year, and now we're at 1.9 as recent as October. So there's not much for sale. I mean, there are properties for sale. Obviously, there's always properties for sale, but there's not that much for the amount of buyers that are looking. We have the sold median, $480,000, which is pretty good. It's pretty high. The average days on market for the year is 31. Still pretty fast, you know, all things considered. It seems like in the summer, in this April and May or leading into summer, April and May, the days on market shot up for the entire area. Average sold 487 per month. Average sold price 578, but the median sold price is a flat even 480,000. Current supply, we have 1.9. Again, the number of months it would take to sell all of the current active listings. 1.9. Super strong sellers market, like ridiculously strong. Median list price right now is $580,000. I always, you know, people are testing, right? A lot of sellers are testing because you're thinking, like, if you look at the average sold price is 480, but the average I always get them confused. The median sold price is 480, but the median list price is 580 right now. It's $100,000 more than the median sold price and what properties are selling for. And that could be contributing to this because in 22 and even in 21, 22, this was so low, man. The average days on market was like 17 or 18. Homes were flying. But this tells me when I look at this, I'm like 580 compared to 480. It just means that sellers are trying to get a lot of money for their homes, right? A lot of money for their homes. And it doesn't always work out that way. And that's why there's probably a lot more inventory sitting on the market because they're just overpriced. Overpriced. And a lot of people are just trying, again, they're trying to get as much possible money as they can for their properties. So now let's look at Monaco. Let me see if I can find Monaco. I did those 3. You better come up. It's Philly. All right. It's all right. We'll go with Philly next. Eventually, I'll get to Monaco, but I want to go back to January. Monaco will be the last one. Philly's always very, very interesting to look at. Obviously, it's a major city. So a lot of people live there. A lot of people live in Philly. But as I told you earlier, it is much different than the surrounding suburbs. And this is why. Go back to everything. We're at an average maybe of 2 months supply of inventory for the 3 counties we already looked at. Look at Philly. 4.8 right now as of October. In March, it was 5.1, 5.2. That is a very, very neutral market. That means that buyers that were buying in Philly around this time, if they were okay with the interest rates and they just wanted to get in the home, understanding that they're going to be able to refinance in a couple years and get it down, hopefully 2.5, 3 points maybe. If they were okay with doing that, there was much more. There was way less competition and much more homes for sale for them to pick and choose from. So as you can see, as recent as October, 4.8. 4.8. That's pretty staggering. You're very close to still at a neutral market. So if you look now in November at 4.4, still a seller's market, very close to a neutral market, and you have more opportunity. Okay. So obviously these numbers are always going to be so much more. 11,000 total units sold in the city because the city's much bigger than the suburbs. $265,000. This is really high for the entire city. $265,000. Again, we looked at that. I want to show you what it was like last year because even though the inventory levels are much higher in Philly than the surrounding area, 260 grand was the median sold price. But you can still see that values are going up, even still in the city. Even still. I'm glad that this is working as fast as it is too. So 255 grand, right? So a $5,000 increase, right? So values are still going up in the city. You can see here, right? The month supply of inventory was less overall last year, and it has definitely gone up. It has definitely gone up. That's pretty cool. Good for the city of Philly. Got my Eagle sweatshirt on. Big game Sunday. All right, now we're going to look at Montgomery County. It's the last county that we're looking at. It's the last one, and I'm going to find it on here. Here it is. Here we go. Montgomery County. Montgomery County, I believe Montgomery County is the biggest it's either Montgomery or Delaware County, the biggest county in the suburban Philly area. So for Montgomery, we have, again, very, very, very similar to the other areas. As of this past October, 2 months supply of inventory. The year started out pretty low. It didn't really get much high at all. We're probably average around 1.8-ish month supply of inventory for the entire year. Super strong sellers market. You got the median sold price at a flat $450,000. Average days on market for the year so far is 33. So properties are taking a little bit longer to sell here than the other counties. Median list price right? As of November this year, with 579, the median list price is 525, so $75,000 more than the median sold price. Again, people are probably just trying to get higher numbers and trying to see what buyers are willing to offer, and that's probably why we're seeing 33 days on market. Current supply of inventory right now is 1.8. Not much working, man. There's not much there. There is a lot to be said about this area, the greater Philadelphia area, and the fact that there's not much. So we had 450. So if we go back to January and we look all the way up until December, let's see what the median sold price is. What do you think? I'm going to say, without looking, 415,000. I'm gonna go crazy. 415. Oh, 421. I wasn't too far off. 421,000 last year, and now we're at 450. And it could even go higher, right? Because we still got pretty much, well, we still have 2 months to go. So that is what is happening with the current market in the Philly suburb area. Now, I'm very curious to get some feedback and get some questions about what is going on. I'm going to talk a little bit more, show you a couple other articles that I'm looking at, that I'm watching. But man, I see that and I'm thinking to myself, it is for people that are moving out of the city. Now, I believe that there will always be a good chunk of people that want to move out to the city into the suburbs, right? So for me, growing up, like living in the city, I mean, I don't know how many other people who grew up and live in the city, they think I'm going to be stuck here forever. But that was a thought process. Oh, I'm going to be stuck here forever. I'm just going to live in the city for the rest of my life, right? And it isn't until you get older and you start to figure out your life that you're like, yeah, I want some more space. I want some more space. And, you start thinking about starting a family maybe, so you want to be in a better school district, and then you think about moving out. But there's always going to be an exodus, right, from the city to the surrounding suburbs. So there's always going to be people that are living in the city, that were born and raised, that try and get out and move to the suburbs, right? I think that's going to continue to happen. And I'm going to we're going to go into some predictions for 2025 and 2026 in a little bit. But if you are looking to sell your home in the city, as you have already seen, it's not that strong as a seller's market as it is out here in the suburbs. Is it still a seller's market? Yes, it is. But buyers have a lot of options. So even if you're thinking about moving to the city and buying there are more options available. But if you're not and you're thinking about selling, it might take a little bit longer to sell based on, again, where you list it, how much you're trying to get for it, the condition of the property, where the property is located, and all that good stuff. And that's the same for everywhere. So based on all that information, you can see that the market in the Philly suburbs is still pretty dang strong. Low inventory, very, very low inventory. We're at, again, about a 6.92% interest rate. So interest rates are definitely still a little bit higher. I know people want that 3% again, or even 4%, or even 5%, and we'll get into some predictions. Let's look at some predictions right now to see where that market is going to head in 2025, right? Because this is always really interesting, in my opinion. Let me see. Where are you? I have so many. How many people always have so many tabs up? I have so many tabs up all the time. It kind of drives me crazy, but at the same time, I feel like I need it because I don't want to miss out on anything. All right. So Norada. I think that's how you say it. That's how I always say it. Experts are projecting a notable increase in home sales. This is really important, with estimates showing a 9% increase for 2025 and an impressive 30% increase for 2026. If you listened to me earlier, I said that we are in a housing inventory crisis. We are going to end this year nationwide most likely less than 4 million total units sold. For reference, that is a very, very low number, and it's one of the lowest numbers that we've seen in decades, in a very, very long time. Okay. Um, we need to be at a more healthy market. We need to be in like the mid or like 5.5 million homes sold nationwide. So we're in a big housing Tory crisis, and you can see that as well from the data I just showed you, just in the Philly suburbs as well, even in the city. It's still not at a neutral market. Some months we're closer to a neutral market, but overall you're in 4.5%. So economists are believing that we're going to see a 9% increase in 2025 and then 13% in 2026. That's great. Hopefully that gets us closer to like 4.5. And we're starting to get back to hopefully somewhat of a neutral market, especially with interest rates most likely going to decline through 2025. It's just a matter of how fast and when this will happen. The optimistic forecast is largely attributed to stabilizing mortgage rates. We're expected to hover around 6%. That's not bad. I mean, look, if you didn't buy when they were in the 2%, 3%, 4%, 5% range, I mean, there's probably a lot of people that thought that they wanted to. You may have been told to because it wasn't going to last long, and you just might have missed out on the opportunity. I mean, it's so hard to time the market, but we knew, especially professionals, the real estate professionals knew that wasn't going to last forever. We didn't understand how fast it was going to change, but it changed very, very rapidly, and it changed very, very quickly. So housing market predictions for 2025. Just key takeaways. Again, we talked about 9% increase in home sales. So total home sales, 13% in 26. Rates are stabilizing. The worst of the housing inventory shortage may be ending. I'm excited to read that to you. Homeowners are projected to see a 2% increase in home prices in both 2025 and 2026. That is much more normal. I mean, we saw the hockey stick from mid 2020 to like 2020, end of 2022, which is crazy. And we're still and again, even in this area, it's still crazy how much values have gone up. Housing market has faced various hurdles in recent years, largely due to fluctuating interest rates. However, as you approach 25, there are signs of optimism. I like that. I want signs of optimism. That's important, and we all need that. We all need the signs of optimism. 2024 has been a notably, really tough year for home sales following a lackluster 2023. So 2023 was actually higher in total home sales, and now in 24 it's even worse. So as you can see, the total market has gone down, but home values have not, because the buyer demand is still very strong for the majority of the area, especially right here in Greater Philadelphia. I mean, gosh, the buyer demand is so strong. There's so many people that want to buy here that are just waiting. They're sitting on the sidelines waiting for rates to come down. But the issue with that is, look, I mean, it's generally good for one person and then bad for another person. And that's unfortunate, but that's how it is. It's good for sellers, but it's bad for buyers, because when interest rates do go down, right? Let's just say they go down to 6% sometime in June or July. Like, you're going to want to wish that you purchased a house in the beginning of the year, because there's going to be so much more competition now when interest rates are lower, that the prices are going to go up even more. So that's something you really need to consider. For the seller, it's going to be good because you're going to be able to get more money for your home. But for the buyer, it's going to be a little bit of a challenge, because once you go up against more competition, and then the over asking price and multiple offer situations come back, waiving inspections, like that's still on the line. That stuff can still happen. It's still very possible for that to happen again, especially as interest rates come down. The NAR has noted that many prospective buyers found themselves hesitant to buy due to more rising rates. Look, it's almost like I know what I'm talking about sometimes. It's rare, but sometimes I do. Lawrence Yoon indicated that the median net worth for homeowners stands at approximately $415,000, while renters is merely $10,000. So this is always I don't know how much truth there is to that. I'm not saying that he's lying or that it's fake, and it's probably accurate. But I feel like a lot of real estate professionals say this to get people to like buy homes, right? And this is never something that I say to people if I'm working with them. Like, oh, if you're renting, well, if you buy, your net worth's going to go up. I mean, look, I'm a real estate investor. Pretty much all of my wealth is in our real estate portfolio. So I understand the value of it, but that's not something I'm going to be telling people to get them off the fence to buy, to go from renting to buy. But I do see that, people that are renting, they don't have this asset, which is their home, which can also be a liability. And I think more people probably think of it as a liability because you're always putting money into it. You're not getting money out of it until you sell. But 415 grand to 10,000, I don't know. Maybe that's right. Maybe it's not. Sizable gap underscores the long-term benefits of home ownership, building wealth over time as property values increase, which that does happen, right? But you put out more money to maintain a home than you do as a renter and when you rent a home. Household equity and real estate record highs. Now is an optimal time for individuals to consider. You know what an optimal time is for people to consider getting into the housing market and buying? When you're ready. Shut up with this stuff, man. Stop trying to like put this in people's heads like, oh, you'll be wealthier. When you're ready to buy a home, that's the optimal time. I'm probably one of very few people that is going to say that. When you're ready to sell your home, that's the freaking optimal time. Stop with this optimal time crap. I'm sick of it. It's not true. It is when you're ready to buy a home, when you have the financial security to buy a home. That's the optimal time. You can't time the market. The optimal time for everyone to buy a house was pre-2020, if you want to really be honest, because rates have gone up even more. Home values have gone up even more too. But here's the deal. You're ready when you're ready. Don't worry about the market. There's always ways that you can be successful when you're deciding to sell or buy. Don't believe this crap all the time. I wanted to read it just to yell at them. Unum predicts again 9% in 20 home total property sold, 9% increase, 13% in 2026. Let's see, 2025 sales production, existing homes to rise 9% year over year. New home sales to jump 11%. That's good. Existing home sales to rise 13% year over year. New homes and 8% in 2026. Stabilization of mortgage rates. So we may not return to 4% range experienced during the previous administration. Rates are expected to stabilize between 5.5% and 6.5%. This is out till 2026, okay? Which is good. 5.5% is still good. Historically, rates are, if you look at it from they've been tracking it, 7.5%, 8%. So 5.5% is pretty dang good compared to that. These levels may represent the new normal for borrowers. Anticipated rating cuts. Again, you have maybe heard this before. What is it? Date the rate, marry the house. I mean, stupid ass saying, in my opinion, but the theory behind it I can get behind if you are able to maintain that current mortgage that you're buying at for an extended period of time. Okay? Don't do anything that's stupid and it's going to put you into a dumb financial position. That's what I'm going to say. Don't put yourself in a stupid financial position trying to buy a house. You have to be smart about it. Yes, you can buy at a higher interest rate with the expectation to refinance into a lower interest rate in a year or two. You can absolutely do that. And I think you should have that mindset as well. But don't put yourself into a dumb position and thinking, oh, I'm just going to date the rate and marry the house. Don't buy a bad house. Don't buy a bad deal because you're hearing this ridiculous slogan by lenders and real estate agents. Drives me crazy. Home price prediction, 2% increase in median home prices in 2025 and 2026. So home values are going to keep going up. And this might be more of an incentive for you to buy now or soon, because values are just going to go up even more. It's going to cost you more. But at the same time, as rates come down, hopefully the monthly payment will be less, right? So it's so nuanced, right? That's why I get so frustrated when I hear these stupid sayings, and I hear agents and lenders trying to push, well, your net worth is going to be so much more. Like, you're ready when you're ready. That's the simple fact. The same thing with selling. You're ready when you're ready to move on. 2% economic factors influence the housing market. Yeah. We know all this, right? We're familiar with all this. The wealth gap between homeowners and renters. Regional trends is important, right? Obviously, in Greater Philadelphia, and I'm going to pop away from that. The market in Greater Philadelphia is much different than a lot of places in the U.S. It's not like a bubble here, but it's always I can't say always, but since I've been in real estate since 2016, it's always been very strong. We have a very here, I actually wrote down some of the big reasons why. Did I not save that? What are you doing, you knucklehead? Here we go. Top 5 main factors why people choose to live in Greater Philadelphia. This is important. Affordability compared to nearby cities, right? So when people are thinking about living in Philly compared to DC and New York, it's like a no-brainer, right? Like, if you have the ability to work from anywhere, you have a remote job, you can do whatever you want. You don't need to live in New York City, right? Why would you want that? It's so expensive. The same thing with DC. It's so expensive. You can live in Philly, right? And as you can see, the median sold price is 260 grand, right? And there's good parts of there's nice parts of the city to live in, and people want that vibrant culture. And the suburbs are very, very attractive, but the suburbs of New York and DC are way more expensive than the suburbs here. Way more expensive. A lot of diverse job market and economic opportunities. So Philly's economy is thriving, especially with healthcare. So we have Penn Medicine and CHOP, which are amazing, amazing hospitals. And they branch out into the suburbs as well. So like main areas are in the center city, and then they branch out. They have all kinds of different hospitals that are owned by CHOP, or hospitals that are owned by Penn Medicine, Jefferson as well. Education system is really, really, really strong in this area. So you have University of Pennsylvania, you have Drexel, you have some of the top school districts in the area, in Greater Philadelphia. I forget the last I looked. It's like 25 of the top school districts, of the top 100 school districts are in Greater Philadelphia in the entire state. Our school districts are awesome. I'll say that. So that's another big reason why people want to live here and move here. Suburban areas, you have like King of Prussia experiencing growth in corporate jobs and all kinds of business hubs. So different kinds of pharmaceutical companies, Merck, and we have Boeing out here in Chester, right? There's so much, like there's a huge amount of job opportunities in the area. Rich history and cultural attractions. Philly's the birthplace of America. Tons of great landmarks like the Independence Hall and Liberty Bell. It's cool. It's cool to watch. It's cool to see once, but like there's so much to do. There's so much to do. And we're really close to some of the best things, right? We're really close to the Poconos. It's an hour and a half drive for the most part. So skiing, snowboarding in the winter, you're an hour and a half drive to the shores, to the beaches in Jersey Shore. You're close. You can get to New York very easy. You can get to DC easy, 2 hours, hour and a half, right? You can easily get to Lancaster, which is an awesome place in Pennsylvania, to the mountains of like northern Pennsylvania, right? It's just, we're in a very good geological area, and it's easy access to so many main areas, main airports, right, for travel. There's so much, and the healthcare around here is phenomenal. Healthcare is huge. Convenient, again, I just talked about convenient location, accessibility. but healthcare is big, and that is one of the most important things that the older generation is thinking about, right? So anyone in their 50s or 55 plus, right? They're thinking about, okay, where can I live for an extended period of time where the healthcare system's great? Our healthcare system is awesome. I know this firsthand, man. It is amazing. This is a great, 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 great area, great place to live. And you have diverse neighborhoods and diverse suburbs too. So there's a lot going on here. A lot of people want to live here. I have no desire to ever move anywhere else, probably until I'm older and retired, right? And even then, I'm going to be thinking about like places that are just as good as here because we have the best of all these worlds, right? I have young kids and they're in the school district now, and I want them to stay in this school district until they're graduated and maybe if they want to go to college or whatever. But these are all the things that attract people to this area, right? It's a very, very, very popular area. We got some of the best sports teams in the world. I mean, the Eagles, the organization, the Eagles fans, the sports fans here are unbelievable. The most passionate, in my opinion, of all the cities. And it's just an amazing, amazing area to live. That's my pitch, man. Greater Philadelphia is awesome. I love it here. Um, would love to help you in any way if you're thinking about selling or even relocating here. Also, if you're an investor and you're looking to buy here, like reach out, man. Click that link below, schedule an appointment with me. Everything is completely free, right? The conversation is free. You know, we start working together. That'll be great. We'll have everything mapped out. We'll have our contracts mapped out and all that good stuff. But look, if you schedule an appointment with me, I'm not going to hold you or anything. You don't have to work with me. We might not be a good fit, okay? We might not be a good fit. But if you are looking to do something, I'm always looking to help. I hope you have a great day. I hope you have a great week. I hope I can get this plumbing fixed for like a little bit cheaper than 2,500. I mean, just seems like pretty crazy, man. But everything's so dang expensive. But anyway, go Birds, go Flyers. Sixers are terrible right now, but go Birds. And you have an amazing